Hello, how's it going, you guys? Welcome back to another video. Given that I never showed you any other videos, but today we will be talking about SMT Divergence and, drum roll please, dynamic sizing. You catch that video? Okay. All right, let's get into it. All right, first up is SMT, where I want to discuss how SMT plays a role into your trading. SMT plays the role of when one lagging model or one lagging symbol is treading behind the other. So, for instance, two pairs that collide with each other and are very similar when it comes to market moves is ES and NASDAQ. What I would want to see is ES and NASDAQ making likely the same moves whenever. And that just keeps the structure balanced. If it's not making the same moves, that means that one has to usually catch up to the other. Given that they're trading in the same frequency. So for instance, we can catch this right here. This is the same day. That's the same day. That's the same day. Then after that, that's the same day. That's the same day. That's you get the point. Okay. So we have a SMT right here with ES being the bullish pair and NASDAQ being the weaker pair. Now what does that mean? Well, with one being the lead mover and one calling the shots, the other will have to follow up. And as of recently, we have seen that NASDAQ has been the lead mover for ES, causing ES to then usually have to follow up with the same moves that NASDAQ is making. So we can see right here that we have on July 1st, displacement was made below this previous day low, reaching into this fair value gap, which ES did not reach into. Later, making a run higher, but failing to close above this previous day high. Now, what does this say? This says that we have another SMT with ES being the stronger pair again, displacing above this high and this high, which NASDAQ failed to do. Now, we can wait and see how ES is going to react into all-time highs, or if you're scalping a short-term move, you can catch this move to target these highs, as ES has made displacement above this high and is also reaching into all-time highs. So you can expect, actually I shouldn't ever tell anybody in my videos to ever expect in trading, but you should look to find a long if a model is granted to you to go long and reach in for these highs as a short-term move. Now, with that being said, that is how SMT works, where the one laggard is able to be emphasized on because we have evidence from the twin pair that we are seeing something that has not yet to come on the other pair. So with NASDAQ, we have seen that these highs of June 30th, let me move my head, of June 30th have been reached in ES, on ES, while on NASDAQ have not yet been reached into. So what does that give? That we wait to see this candle or the candle after likely reach into these highs of June 30th of Monday. Now, with that being said, let's go into dynamic sizing, which I would like to break down to you all. Now, dynamic sizing is a little more advanced because it comes to your level of confidence as a trader. With confidence, you have to be able to have data, and with data, you have to be able to have reps. With repetition, you can be able to build conviction. With conviction, you're able to know which setups are able to give you a higher probability of a win-loss ratio, and you would be able to know the other probability models or setups, however you like to identify them, those would probably be a different probability than the ones that you're able to be much more confident on. And confidence also plays a big role into your trading. It's like being a basketball player. One basketball player knows that he's better off being a shooter than a playmaker. One knows that he's better being a playmaker than a shooter. But that's not saying that one cannot be the other. They just do not have the same confidence in that role as the other. That is how your probability models play. You have a probable model that knows its role, that knows how it should be used. You have another probable model that you're able to understand, but it's just not used as frequently because you don't have that big of an understanding as maybe where it's used in another symbol such as gold or crude. But I don't want to get too deep into it. I just want to speak on how dynamic sizing is going to help you out in your trading. Now, many of us know about risk. Forgive me about that. Many of you guys know about risk management, trade management, and that's where dynamic sizing really plays a key role, because with risk management, what do you have to do? You have to manage how much you're putting on a position. Not how much that you're risking, but you're putting on a position. Because thinking about it, how much ever that you could risk could be totally different given how much size that you put on your position. I'm not going to have the same risk in the same area if I'm risking one mini than I would if I was putting 10 minis, because we know that the ratio would be different given on our accounts. So what are we known for? What are we known about the golden? What do we know about the golden rule? Is that it's 1 to 3%. Anything higher, that's just it's impulsive behavior. It's not good behavior to have. So we know that with our confidence, we increase size, but we increase size measurably to a safe approach, but also approach that we know could be more aggressive than if we were conservative and safe. So if we are aggressive, we know that the setup gives us minimal risk, but a beautiful entry for our position to then reach the level that we are targeting. So for me, for instance, I like my pretty setups or my models that have the highest success rate usually fall under the change in state delivery with the fair value gap, with the inversion fair value gap. And I'll target the 2 a.m., the London highs or the London lows. But the thing about those setups is that they're not as frequent as the less probable ones. So this is where it comes into effect, dynamic sizing. Because many of us starting out, or even 2 years to 3 years in, we have an impulse still in us, ingrained. And some are able to build it off early. Thank God I was able to build it off early, because, you touch the stove too much, your hands go numb. But with that being said, you kind of have to be able to know when to start realizing that it's about how much you're putting on. Your positions are not failing because they're going after your stops. Your positions are failing because your stops are too tight because you're putting on too much. It's okay to be conservative. It's okay to put on a lower size if you have to, because guess what? If you know that you're putting on a large risk to reward, even if you lower size, you're still going to get a good amount back. If you risk $60, times that by 4, it's $240. If you risk $100, times that by 4, 3, you get $300, $400. But a lot of us, we don't see it that way. We kind of see as it only, okay, we have one position, one size that is ingrained into us that we can only run. While with dynamic sizing, you have a plethora of sizing ways that you can go. So if you're not exactly too confident in it, you're sure, but you want to start building data on this model, start with low size. Go 2 micros to 3 micros, 4 micros, but do not risk too much to the point where you feel as though that you're becoming impulsive or you're not emotionally mature at the moment. You have to be able to be grounded and focused on what it is that you're trading. Not saying, okay, this is it. It's starting to take off. Let me take this trade, because you know that the size that you're about to put on that trade is not healthy. So what is the smart thing to do with dynamic sizing? The smart thing to do is know what trades will cause us to be able to see what the market is for what it is, and let us emphasize on it. Let us then, because as a trader, you're focused on trading. You're focused on taking a trade that is good. That's all. Nothing more to it. Once that's done, you're building your setup. You're building confidence off taking a good trade, not off getting large amounts of money. It's more about compounding through the good trades that you take. So if I take a good trade later on, I will start building a recognition of what a good trade is through dynamic sizing, because I'm able to read the market for what it is through the size that I put on before. Prior to that, I'm able to increase in size little by little, because a lot of what I'm hearing on the internet too is that you have to go through some type of fear to increase size. No, that's absolutely not it. You have to realize that all it is a percentage game. It's a probabilities game. You have to be able to know that the risk that you're putting on is something that you can handle. Yes, don't get me wrong, you're going to get butterflies in your stomach. That's the game. But you have to know that it's something that won't cause you to say, okay, let me get out early. Oh, let me get out too soon. You have to stay calm and you have to stay confident. Even when I was playing basketball, playing against top guys, trust, I was like, these guys are pretty good. I don't know if I, in my stomach though, I didn't say that in my head. In my head, I was like, they still bleed just like I do. I'm going to play my game. And as a trader, you have to play your game. You can't go out of your game and act impulsively. You have to act as you would, not as your emotions would. If you're excited, fall back. If you're angry and frustrated, fall back. Anything that causes you to think irrationally, just fall back. So the one thing I can say with dynamic sizing is build a strong mind and build a strong conviction of the setups that you know of and the setups that you're still working to know on. The more you know about your setup, the more confident you become about the setup. The less you know about the setup, just if you don't even want to put on actual size, just demo trade. But do not go heavy on a model or a setup that you're not aware of or familiar with. And I say this all from experience. Trust me, I'm not a momentum trader, but as much times as I've got FOMO and seen a breakout and I've took that trade and I've got beat up and I've closed before the trade even ran any higher, I realized that that game wasn't for me. And it wasn't because that I knew I couldn't trade momentum, but it was because of my size. You have to be able to know that if you're going to take a trade that you've never taken before, take it as though you're not familiar with it. Slight is very. So what do I say to you guys? I'll pull it into detail. Change the state delivery, fair value gap. What do you have right here? $5 minute of ES.
Yo, you doing something?
Yeah, what's up?
Yo, is it a bad time? You doing something?
Yeah, what's up?
Oh no, I was just saying hi.
Oh, what's up, man?
Alright, bro, I was just being
Oh yeah, you're all good. I'll be out late. I'll be out shortly. Okay. All right. Okay. So what do we see? You have a fair value gap right here. We have a change of state delivery right here. All right. All right. Given that this trade is taken earlier than where I'm most confident and have a higher success rate on my trades, what would I do? I would use smaller size. Now, I would take the trade right here, put it near the pivot low at this range. Where would I target? Target the London highs right here. Bam, yeah. And that would be my trade. That would be my setup. Now, what do we see from this trade? Classic 3-to-1. Anything higher than the 2-to-1 in my books is a good trade. Now, what's the structure most likely? We have a fair value gap, a change of state. You have a little bit of consolidation in this fair value gap. And a lot of us, if we did not have good sizing on, what would we see? Say if I had 10 microzone, trading a $50,000 account. I take my trade on this candle. This candle would have spooked me out of the trade, causing me to close early because of the sizing that I put on that I knew that I was not confident in. Put on lower size that you're truly able to accept the risk. Then you would be able to see this and be able to have no pressure on your shoulders. That is where dynamic sizing plays an effective role. No pressure, no impulsive behavior, simple trade. Because it's either a win or a loss. And I don't even like to say loss. It's either a win or a lesson. You go in that dashboard, whatever it is, you go in that journal, and if there is not even a reason why it just went and hit your stop loss, then, so be it. Accept the game. But if there is a reason that it hit your stop loss, study it. Figure out what it was. But if we look here, where are we? We're in a range of discount. Being in a range of discount, fair value gap, change of state, reversal, bada boom, bada bang, institutional order flow entry drill. If one of you guys would have liked, increase your size right here. Put me out right there. Later. Hits my TP. I'm done for the day. But what do we understand about this? If it was to be that I have too much sizing on this trade and I see a candle behaving this way on the 5-minute chart and I have too much sizing on, I would close the trade early before it continues to make its true move. Have size that I'm able to embrace and accept. Follow on. It's a simple game of life. Stay grounded, stay calm. back and let God. Well, with that being said, that's all I have for today. Talk about dynamic sizing and SMT divergence, all that I caught on today. And God bless, peace, love, and prosperity to all my viewers and watchers. And love to you all.